Securing the facts about Social Security. I'm Erik Brenner. We'll have answers to common questions about Social Security next on Your Wealth Health. Hello and welcome to Your Wealth Health. I'm Erik Brenner, owner of Hilltop Wealth Solutions. Thanks for joining me today. If you're watching us on Facebook, please share us with someone, and thanks for watching us on yourwealthhealth.com. With me today, I have Bill Davis. He's a private wealth advisor in the firm, and we are continuing to practice social distancing, except he's over there, and we've got a little bit different screenshot today, so we're excited to do that. The global pandemic has changed all of our lives in so many ways. For many people who are retired or close to retirement, the pandemic has changed their outlook and in many cases their investment and retirement plans. A recent Harris poll of 2,000 adults was conducted earlier this month, and we want to share with you some of the results that the Harris poll came out with. First off, they said 38% say retirement has impacted them in some way. 19% say they have already decided to delay their retirement, and 10% say they won't be able to retire, and that's about 16 million people. That same poll also asked about Social Security, and here's what it said. 63% understand it's more important than ever to optimize their Social Security, and 28% say they've already changed their plans about when they plan to file for Social Security. We at Hilltop Wealth Solutions think that this is such an important issue, we've decided to do 2 complete shows on the topic of Social Security. This week, we're going to answer some of your most important questions as it relates to Social Security. And next week, we're going to go into an actual case, talk about a couple that may be typical and take you through a case. But we're talking today about Social Security and securing the facts. So, Bill, let's talk about the Harris poll. What do you think are some of the kind of the highlights of that recent Harris poll?
Well, you know, I'm usually pretty optimistic, Erik, about people's retirement, and it's very frustrating that this pandemic continues to disillusion people about their retirement. And 10% said that they may never be able to retire. I mean, it's not uncommon that some people tell us that they'll never retire, but they're talking about maybe some part-time work or something like that. But this is a very difficult time that I think is going to require some assistance by professionals like us to help people get some optimism back into their future thoughts. So there's just that 16 million number I think is an underestimate, but you think about those people that are within 2 to 5 years of being 65 or 66, and can they save more? Can they spend less? What can they do to have an impact on the next 2, 5, 10 years? And are they doing it consciously, or are they doing the talk to the neighbor?
Yeah.
Talk to the neighbor, talk to the buddy on the golf course.
You know, Bill, and I mean, we had seen this prior even to this pandemic, right, where people may retired from what they were currently doing, but maybe they worked part-time. Certainly with technology, they could work from their home depending on what they did in their careers. So we did see that as kind of a growing thing as it relates to what someone might do in their retirement years.
Yeah, absolutely. And so now I think that the workforce that's going to come out as a result of this pandemic, I think is going to be different. And people are having a difficult time figuring out how that's going to fit into their retirement savings plans, spending plans, and as part of this show, of course, for the next couple weeks, really delving into Social Security and how that's going to be able to play. But yeah, this Harris poll is concerning for sure.
Yeah. So oftentimes we see people in this Harris poll is hopefully starting to raise awareness and taking the choice of Social Security, just making the choice and not really examining really what is maybe the best options for someone to when to draw Social Security.
I think people commonly misunderstand all of the options and what the impacts are going to be. So an example would be, if you take it at 62, certainly you're going to have a break even somewhere in your 70s then versus waiting for your full retirement age. But what you miss out on is you miss out on all those cost of living adjustments, and there's some work going on in Congress right now that could negatively impact you if you take early Social Security. So having a calculator like we use to be able to optimize, especially in a couple situation, so when can the spouse possibly claim 50% of the higher earner? When should they both go at full retirement age? I mean, there's just hundreds of options that require using a sophisticated calculator to determine what would be their best option. And then hopefully people aren't taking, what I think we're concerned about, Eric, is that people are thinking that they're at last resort, so to speak, and they don't see hope that they're going to be able to go back to full-time employment, and what are their options to maintain their lifestyle. And so hopefully they'll at least take a long, hard look at, or use a professional and a professional calculator to see how you can best optimize your Social Security.
It's been a question for a long time about whether Social Security will be there or not, and depending on who you talk to, says maybe it'll be there, maybe it won't. So how do we think about the global pandemic and how that is affecting whether Social Security will actually be there?
Yeah, I mean, it's definitely it's affecting the Social Security Trust Fund. I mean, currently they're estimating the global pandemic with the with less contributions going in, with 30 million people still unemployed, not paying into the tax base. It's shortened the life cycle of the lifetime estimate of the trust fund by a couple of years already. So it is having an impact. The pandemic is having an impact, and the longer we go with this shutdown economy and significant unemployment, I think it's going to be continue to be an issue.
Yeah, and we don't know the end yet, like when it's going to end. So, and it's going to be continued to be talked about, I'm sure. So, so that's a piece of it. Well, we often think about Social Security as and educate people around Social Security is that important option, and it's like it is another pension.
Correct.
Don't you think?
That's correct. And with proper planning, we're hoping that people can avoid having that taxed. Mm-hmm. So when you think about a couple that's collecting $30,000 to $45,000 in Social Security, and the first point of taxation is 50% of that becomes taxable, that's just the people that haven't planned appropriately the income streams. I mean, certainly if you have pensions that put you over those limits, that's one thing that you just can't control that, and you certainly want to maximize your pensions. But the balance of savings, the bucket approach that we've talked about in this show many times, is that now's the time to reposition assets to Roth, to non-taxable investment vehicles, so that puts you in a position that you can take that Social Security. I think you shared a stat with me, Eric, that currently about 50% of the people collecting unemployment are paying tax on it. I mean, that's a big stat. That's an interesting stat.
Yeah, they're collecting Social Security.
Correct.
That are paying tax on it. Yeah. So, in this whole thing about is it going to be there or not is another issue.
Yeah, and we believe it's going to be, and we believe it's a critical component of a person and a couple's retirement income strategy. Mm-hmm. And so we believe that with so many people in retirement now and the rate of people retiring, I just don't. We can't envision that our government wouldn't back up the Social Security Trust Fund.
Yeah, great. Thanks, Bill. So we know people are paying more attention to Social Security, but there are still some misconceptions about it. We'll set the record straight when we come back on Your Wealth Health. Welcome back to Your Wealth Health. I'm Erik Brenner along with Bill Davis here, and we are talking about Social Security. And Bill, we know people are paying more attention to Social Security today, and I want to circle back to this, will Social Security be there? Because I know that's a topic that we have often with clients, and I know clients said they have it often with their friends and family and so forth. So let's talk a little bit more about, will Social Security be there?
Yeah, so there's going to have to be some legislative attention given to the Social Security Trust Fund. As we said, the pandemic's shortened the life of it by a couple years so far, and we don't know when the pandemic's going to be done. So what are some options? Well, my full retirement age is 67. It'd be very easy for them to say, no, now your full retirement age is 70. They could, there's just a number of different things. The payroll tax currently ends at $137,700. So you don't contribute, those people making over $138,000 a year, they're not contributing any additional money to Social Security.
Yeah, and I think that's an important point, Bill, because oftentimes, first off, a lot of folks don't realize that you're capped at the amount you pay into Social Security. Medicare continues.
Correct.
So there's two pieces. There's Medicare and Social Security. And so that's a great point to point out that could get raised even by a $25,000 or $50,000 number in income, and it would pay a lot more into the system.
Yeah, well, that would be a big number. So yeah, raising the age, raising the cap on that. You could be talking about reducing COLAs, cost of living adjustments, a small amount, and there was some activity in the legislature. This Senator Larson had brought out some possibilities earlier in the year, but once the pandemic hit, of course, all of the attention in Washington went to pandemic assistance.
So we do really feel there's going to be reform. There has to be reform to keep it going. And we mentioned in the first segment that we look at this as a pension, so you want to make sure the pension's solvent.
Exactly. Yeah, your pension's only as good as the trust fund that backs it up.
Yeah. So another thing that comes into play of many when it comes to Social Security and the decisions is life expectancy. And I think a lot of times it's people just honestly realizing what their life expectancy may be. Mm-hmm. And it's different than what it was even 20 years ago as it relates to someone's life expectancy and how long they may be drawing their benefits.
Well, 1 in 4 people are going to outlive the standard life expectancy. And those people are going to live longer in retirement than they worked in many instances, 30, 40 years. And so, yeah, the amount, when we run a Social Security calculator, it always amazes me to see the total amount of Social Security they would receive just using standard life expectancy, 86, 84, something like that. We're talking, I've seen estimates of more than $2 million that a person collects.
Yeah, over their lifetime?
During the years that they collect Social Security. And I hear it all the time from retired clients, like, I was so glad I took my Social Security at 62. I've now collected it for 20 years, and I'm 82. So.
Yeah, that's pretty amazing. The other thing is about their monthly benefits. Mm-hmm. So I think folks are really shocked at the benefit that they get, if they're a married couple, and how much they get in monthly benefits every year, or every month, and then it adds up to every year. We're seeing $5,000, $6,000, $7,000 a month combined. And I don't think they really had a sense when they were paying into the system that they would get that much.
And don't you see it all the time, Erik, that people are all concerned about stashing away all this money for retirement, and good, that's a good thing. And then they get to retirement, it's like, I don't really need all this money. I'm getting my Social Security. And so that's where all of this income planning comes into play, is so that they're not faced with things like required minimum distributions, putting them in a higher tax bracket, and so possibly starting to take money out of those different buckets earlier than later to keep their Social Security from being taxable and to avoid taxability issues down the road, which could be, 5, 6, 7 years down the road where their required minimum distribution kicks in at age 72. So and it's not just calculating the complexity of Social Security decision making. It's a forward-looking situation to determine other sources of income that are going to cause their Social Security to be taxed.
So thinking about work, and if someone wants to work and draw Social Security, which is certainly an option prior to full retirement age, but there is some limitations there that you just need to be aware of and make sure that you're doing what's in the best interest of your situation.
Yeah, I think it's right around $18,000 a year if you claim your Social Security prior to your full retirement age. And so, so if you're going to go on Social Security at 62 and work part-time, once you exceed $18,002, $18,004, something like that, now your Social Security is going to be cut $2 for every $1 above that earning level. So as long as someone can do that and claim early, just have to watch that income limit.
And that claiming early, we have people after we run all the calculations, and Social Security is just one of those calculations in their overall retirement plan. But we come to the conclusion that yes, it is best for at least maybe one of the spouses to claim early. But when you think about it, and this is why we say it is a pension, because almost all the people that we've worked with would not take a pension early and take a lesser benefit. They really get and wait till it's fully vested,
right,
before they draw it.
Right.
And Social Security also has a cost of living adjustment to it. Now, certainly that could be affected going forward, so we don't know. Maybe they could take that away as well, but that's another factor as it relates to that.
We're finding more people, Eric, that are going back to work. So they're like, hey, I'm bored or whatever, and so people should realize that once they reach that full retirement age, they could go back to work full time and have as much earnings as they possibly want.
Yeah, it's a great point. And we mentioned earlier about, we're seeing more of that. Someone retiring and then going in a consulting role. And again, with technology and being able to work mobile, they have flexibility. It certainly can help their retirement. Some extra income is good for some travel or other expenses, spending it on grandkids and other things, and even covering health care. All of those things are important as it relates to that.
Yeah, funny story. I was at the hardware store yesterday, and my retired postman was working at the hardware store, and the retired fire chief was working at the hardware store.
There's the part-timers,
Yep.
right?
Yep.
So again, having that, as a piece, but just making sure that you're doing what's in your best interest. And we stress all the time that your friend, neighbor, coworker, their situation is different than your situation. So you don't want to take advice as to what they did and determine that's what you should do.
Well, and we're just hoping that people, in response to the pandemic and furloughs and early retirements and things like that, they're just not making an uninformed decision.
Yeah, thanks, Bill. So if you have questions about Social Security, your financial advisor should have answers. Bill and I will answer some questions when we come back on Your Wealth Health.
At River Valley Construction Group, we pride ourselves on being one of the top deck builders in all of Michiana. If you want to have a beautiful deck, whether it be wood or composite, contact River Valley Construction Group today. River Valley Construction Group, where we're building your dream deck in 2020.
Welcome back to Your Wealth Health. I'm Erik Brenner along with Bill Davis. We are doing the first of 2 shows on Social Security. It is such an important piece of retirement planning, and there is so much information, we felt it was worth 2 shows. Today we're doing Securing the Facts. And next week, we'll walk you through a case study for a typical couple that's planning to retire. We'll examine their Social Security issues and options. But right now, we want to answer some common questions that we often get asked when we're talking about Social Security. So, Bill, one of the questions would be, how long should I wait before I take Social Security? And do I get more if I wait, past my full retirement age?
And as in all of these questions, it depends,
Yep.
right? I mean, that's the importance of planning. So, if it's a couple, I'm always cautious of taking early Social Security due to the spousal benefit. So just to spend a moment on that, when you have a couple, they're both going to receive a benefit, whether they're going to receive their own earned benefit or their half of their spouse's benefit. They're both going to receive a Social Security benefit. So you get into retirement, the husband goes to maybe full retirement age and takes their benefit. Next week we'll have some examples of this. The spouse takes half of that person's benefit. The spouse dies, the remaining spouse is only going to have is only going to have the greater of those two. So it's common that the higher income earner is interested in taking Social Security early. And so what I worry about with that is that if they predecease the lower income earner, what are they leaving that surviving spouse with? They're leaving with a lower benefit for life. So yes, once you get to full retirement age, Social Security increases your benefit by 8% every year up to age 70. So a couple could possibly delay taking Social Security beyond full retirement age to age 70, have that benefit go up 32% from a 66-year-old, and then that would be the locked-in amount for life if the higher income earner were to predecease, be the first person to pass away. So that's a very, very important decision that I think people need to take into consideration if they're a couple. If they're not a couple, if they're a widow or a widower, the situation would change, and that's where the advice of a professional could help.
And the other thing that to mention there is this cost of living that we currently have on Social Security, which is based on a index, so it's not an act of Congress. So currently it's based on an index. Probably that index this year, it may not look good, so there may not be a increase, but it's based on an index. And so, the higher the benefit, certainly the higher the increase.
Correct.
So it's a higher number. So when you have the cost of living on a higher number, it will be a higher number. So that's another thing I think that a lot of times people don't calculate.
Well, yeah, somebody's benefit could go up 8% and get a COLA of 2.6. So, we don't have any investments with guaranteed 10% returns, but in the case of Social Security, or even 8% returns, in the case of Social Security, you do have some guaranteed interest increases. So,
yeah, so
the compounding effect of it can be very significant for to look at considering delaying.
Yeah. So what about Medicare tied to Social Security? Sometimes there's some confusion around that. So let's just talk a moment about how that works, how Social Security and Medicare work, and are they really attached at the hip or not?
No, they're not attached at the hip. In fact, they're funded totally differently out of different tax buckets. So a lot of people confuse the fact that full retirement age is 65. Well, no, 65 is the age that we all qualify for Medicare. And so that is totally different than the full retirement age calculation for Social Security. Again, now there's additional taxes that are applied to Medicare Part A and B that for higher income earners, that can be confusing as well. But Medicare premiums come out of Social Security payments for those that are collecting. And so for those that are delaying Social Security and going on Medicare, that's going to require an out-of-pocket premium on a monthly basis to pay for their Part A and potentially Part B Medicare.
So, and we mentioned it earlier, and you were talking about, if you have a spouse and married and so forth. But, we really encourage people to think about this is not just a decision for yourself. I mean, you have to really look at spouse, especially if there's an age gap, a fair amount of age gap, as you said, in the benefits and, how people draw.
Absolutely. Yeah,
So.
I've seen many selfish decisions made. And that is, I'm getting it at 62 because it's going to run out and I've paid in, it's my money and I want to get my hands on it.
Yeah.
Not even thinking about that they're going to, disinherit really their spouse by taking a lower benefit because they're probably the one that's going to predecease the spouse and leave them with, a pittance of benefit.
Yeah. The other thing that gets into some detail, but I think that's important, Bill, is so if somebody's divorced, there should just be some aha moments saying there could be some benefits there that maybe gets overlooked because the Social Security Administration is not going to send you a notice saying, hey, we noticed you're divorced, you may have benefits.
Correct. Once you've been married for 10 years, you qualify to claim on your divorced spouse's benefit. And I've had situations where I've had people that were married 3 times for 10 years. And the Social Security Administration needed to look into all 3 of those spousal benefits to determine what would be the greatest benefit the client could take. And so that's commonly overlooked and misunderstood, that there's you need to be married 10 years. And after that 10 years, whether they're deceased, there is one thing you have to be single still.
Yeah.
You can't be remarried.
Right.
So you can't bring in a divorced spouse's benefit into a married situation.
Yeah.
That's only going to be for the married couple.
Yeah. Hey, there's an interesting stat from this Harris poll that said if 80% of the people said that they would seek a new advisor if their advisor could not answer questions about their Social Security. And really, what we do is we do a lot of training, a lot of education. Bill and I spend a lot of time on that and holistic planning. We do a Social Security analysis. Yep. So when you meet with us, we can run a Social Security analysis for you that is free of charge. That doesn't answer really in the holistic picture whether you should take Social Security early or delay it or who delays it or what, but it gives us a piece to help put together kind of the retirement puzzle.
And I think it helps clarify what we're talking about on this show is that, they start to see, oh, wow, if I did this or I did that and I didn't know that was available to me. And so.
Yeah, great.
Thanks,
Bill.
You bet.
Yep. Well, we're out of time this morning. Remember, next week we're going to have part 2 of our show on Social Security. We'll have a case study that examines a typical couple's Social Security issues and options. For Bill Davis and everyone at Hilltop Wealth Solutions, I'm Erik Brenner. Thanks for watching, and we'll see you next week.